Hello and welcome to the Trading Zone. It is a Monday, July 7th. Another fantastic week of trading is ahead of us, full of more surprises. I'm sure it never ends this year. Surprises around every corner. Brian, how are you doing this week?
Great. Yeah, definitely surprises around every corner. Lots of information about the tariffs. And we want to get into that. We want to talk about how volatility is going to be impacted by these tariffs, whether they go through, whether some of them get delayed, whether they get jacked back up, who's going to be the players in it. And then obviously we got the big, beautiful tax bill all having effects on the market this week. And so, Joe, let's get into some of the volatility plays here. We always like talking about the skew, where VIX futures are trading, how we're playing it. I'm Brian Stelton here, Equity Armor Investments portfolio manager with my colleague Joe Teague on the Trading Zone. And this is interesting here. You look at the VIX and the history. We love this chart. We looked at it last week. It helps really kind of digest where VIX is sort of spiked relative to news. And really, if you really recognize it, as soon as major events kind of happen, you've been able to jump on the bandwagon with volatility in that direction. So if it's bad, you're sort of able to jump on and buy vol. If it's good, you probably want to get out of it because it's going to come crashing back in again. Any thoughts on where we go next? Is this sort of a bottoming process here in the VIX, Joe, do you think, or do we just stay at low levels now?
Could be, we're kind of pushing higher and, the market's pushing higher, volatility is pushing just a tad bit higher. It's too early to really say. I think we're just in this range, this 22, this 22, 17, 15 range. That's where we are. If we get above there, we should take notice. Below there, just kind of bouncing around higher, lower. Some news items making people a little more anxious than others. But I think it's kind of like a sweet spot right now for volatility, maybe a little bit higher today. I'm not so worried about that. Just kind of saying, hey, things have come down a big way. We still have more catalysts to come. We're going to get out into all that later. But yes, all these things were pretty surprising news. Brian, something like a debt downgrade would be really surprising, leading volatility to the higher standpoint. We've seen some volatility suppressing surprises too. So we're just be watching all of that. It is something to watch out for. The skew is something we look at as former VIX market makers. I know people want to hear our opinions on all the politics and everything else, but I think the people that really want to hear us talk about is volatility. Skew is a leading indicator for the VIX index for us, Brian. We're seeing this kind of fluctuating back and forth. On the lower end of its range on the skew, this might tell us that volatility is trending a little bit higher. But again, we're still in this similar band here, Brian. We got these lower highs here. Volatility is compressing. We should expect this for the summer.
Yeah. Although, the fact that it's kind of made a slightly higher low than just a few weeks ago, and it hasn't really touched down on that green trend line makes me a little nervous about what's to come to the upside in terms of put buyers. But I actually think I could take the opposite side of this trade, and I think it's a great opportunity to be a call buyer because when call prices aren't priced up as high as a put, relatively speaking, to where we were like a year ago. And I can do some like stock replacement in this scenario, right? Where I'm no longer long the market, but I get long it via calls and express it versus a call. And that's really paid off quite well as this market has just grind through and moved higher. If you're trying to figure out, do I jump in now or later? I think buying a call right now is a great way to express a long opinion about the market.
Absolutely, 100%. Market just continues to be climbing the wall of worry, the call wall of worry. There's no call wall. It's just bashing straight through it. 2 fantastic months in a row. We'll see what July brings. Now, usually you see like slow down summer months. It has really been the case. Usually you see a lot of volatility in the fourth quarter. Well, we've already seen a lot of volatility so far. So maybe we got a subdued volatility for the summer months while the market's racing higher, and then volatility returns in end of August, September, where it usually pops up. We'll be watching that and taking a look at the predictions for that. We can look at the VIX futures curve, and we're kind of in the sweet spot for bulls. I think this is what the curve that the bulls want to see we have this contango action happening here. We have the VIX lower than the front month, which is lower than the second month. That's exactly what the bulls want to see. That's kind of a healthy VIX futures curve.
Yeah, and when you look at where the VIX futures were a month ago, right? And we're talking about mean reverting because that's what volatility is. Like the amount of movement in the market tends to be somewhat normalized and go back to its normalized back and forth movement. And the VIX futures represent of what people think volatility will be 30, 60, 90 days from now, whatever. Um, a month ago, not that much higher than we were right now. So if there is a vol pop, I think it's going to be hard to just explode to the upside, and that will kind of act as sort of the mean reversion if you look at that purple line there. Uh,
Mhm.
and so, but that doesn't mean, again, I like being long volatility in some aspect because I think it's pretty cheap relative to where it's been. And you know, we saw that's the skew index ticking up a little bit, meaning there are some people out there buying puts for protection. There's a reason why they're doing that.
Yeah, just to be cautious, though, still is July here. If there's nothing happens, we are going to see this kind of trend in here.
Mhm.
But you do see like some sticky action, of course, with these back months here. You got this August and September here. That's going to be a little slower to move down if we do sit still and the VIX stays in the 17 range here. So be watching that. It's it's an interesting dynamic. It's something that plays out quite frequently. Of course, people watching these VIX futures, they know this very well. That's something we do professionally for our clients as we watch these VIX futures. And you know, we even though we are aware of this dynamic, we're still able to express some long volatility without that type of decay.
Do you think this is just a function of like the VIX futures? Like we're in a bull market and typically the VIX futures curve like steepens like we're seeing, or are people looking for something to happen in August and September that those 2 months are sort of sitting significantly higher than where the VIX is at?
I think it's more of a dynamic. You see this in these V recoveries where you have this big sharp sell off in the market and volatility, of course, spiked. I think there's still like a lingering effect. People are still expecting volatility to spike again. They're expecting something to happen. So they're keeping these futures higher. Now, maybe the odds are, you know, higher of something to happen because of this recent volatility. So maybe that makes sense. But if nothing does happen, you see this quick pullback in the futures. My 2 cents.
Yeah, no, it's a great point. I think it's a lesson to be learned for people to watch how these things sort of behave and to figure out which VIX futures to own if you want to buy a hedge.
Absolutely. And, you know, of course, the opposite is true, but it's very, very careful, of course, if you want to be short these VIX futures because we know how quickly they can go higher.
Yeah.
All right, let's look at the big headlines. Of course, we got new news of new tariffs coming out. Countries doing work with the BRICS bloc. Trump's adding an additional 10% tariffs to them. It's kind of like the tariffs on our enemies. I don't know why we didn't start with these tariffs, but maybe it makes sense in the big scheme of things to get like your team together on your side, get them all singing your song. Maybe this is kind of like a leadership through strength. Maybe now we got some trade deals coming with our allies. Hopefully more will be coming really soon. And then we can all get together working against people who are our adversaries. So yes, I'm glad to see this. Maybe I would have started here, but maybe it makes more sense. Maybe I'm not looking at the big picture correctly. Maybe it did make sense to work on our friends first and then move on to our adversaries so we can all get together.
Yeah, I think that's right. I mean, it's kind of like you can either be with us or you can be against us. If you want to be in, you know, Group B, the adversaries of the BRICS, yeah, this is what it's going to look like. And if you work with us, let's continue to work together so that we can continue to build trade relationships and global trade with each other. And we don't need these other guys if you don't want to, you know, play by the fair rules.
Yeah, and speaking of the rules, we're extending the deadline for a lot of other countries. So I think that's kind of like a back and forth tariff news. Just kind of watching it back and forth. This is absolutely what we have going on. I have the wrong week here. Sorry, this is last week. This was kind of a hectic morning for me this morning, but this is week of July 7th. We had the jobs report last week, Brian. Decent enough news on the jobs front. ADP was pretty weak. Jobs, the non-farms payroll was actually pretty strong. All things considered, but surprisingly strong government jobs growth. So anyways, that's behind us. The big, beautiful deal, that's behind us. Maybe we had some, you know, buying ahead of that announcement. Trade deals, are they coming? Are they not? Hopefully we'll be hearing some soon. And then we got, the next catalyst could be interest rates coming through. We do have big inflation data coming next week, CPI and PPI. And of course, earnings are going to be kicked off with the banks next week. Also, Brian, just a quick plug. If you stick around to the end of the show, earnings next week will be on Taiwan Semiconductor, and a big supplier of Taiwan Semiconductor, a company we've been following for a couple of years now on this show, ASML. So we'll be trading ASML ahead of their earnings coming next Thursday.
And if you want, go to equityarmorinvestments.com. You can subscribe to our subscription newsletter to get our trades of the week. And when we update those trades in timely fashion, they've done quite well over the last sort of year and a half or so since we started offering this out. You look at the graph here on the S&P. I'd like to just make one, quick point back, because we brought up news on the tariffs of August 1st that people would get reverted back to that. That could be one reason why these August, September VIX futures are a little bit more elevated than you would see in the July and the shape of that VIX futures curve. So look, there could be an event coming up, but you look at this chart here in the S&P, and it looks pretty healthy to the upside, though. And this is what I'm talking about, owning calls and trying to continue to ride this if it just keeps going.
Yeah, and this, of course, is the V-shaped recovery we were talking about. Fantastic news. But this was really volatile. This was a massive move back and forth and that massive round trip up and down. We should, it seems natural to think more volatility could be coming. Historically, though, when this happens, usually volatility does get suppressed, but that doesn't mean that it's going to be exactly the same that it always has been. And when you see big moves like that, it's kind of natural to think, hey, maybe there could be another move coming soon. The NASDAQ, the exact same story, kind of leading the way just a little bit. It's really good to see the tech leading, specifically, of course, the semiconductors. Really cool to see them reaching their all-time highs. But one thing that has not quite made it there, Brian, is the Magnificent Seven. They still have a little bit more room to climb to reach their all-time high. They're still climbing really rapidly, of course, but they are not at record levels. What does that tell you?
Yeah, I think, what's really lagged it, you look at, interestingly enough, Alphabet, Google, down 5% year to date. That seems a little weird to me. I don't understand why it hasn't participated with all the others. I would probably be a buyer of that. We own that for clients. I own that myself as full disclosure, but to me, it seems like a stock that's unfairly lagged a little bit. I don't know if it's the competition of like their ownership in Waymo versus Tesla, autopilot taxi features, if it's their search engine, will not bring the kind of revenue going forward that AI will provide and maybe reshape that business. So that could be one reason. But obviously they're a leader here in the AI front, moving forward. And then you look at Tesla, another one that's obviously the announcement of the America Party. Kind of weird to say America Party, not American Party. But anyways, that stock down 8% today off that news. Tesla down, I think, 27% year to date has really been the drag. But all the other names I'm a buyer of. I like them. They shape out with the rest of the market. So remove those two names out of the Mag 7, you're down to 5, and it looks a lot better. Obviously, Apple's another name in there that's been a little sluggish, seems to be lacking the AI big boost play. So so now you're really down to maybe 4 names that are really the momentum trade to the upside.
Yeah, Apple lacking the AI momentum that some of the other names have had. They're lagging sales in China. It's been a struggle for them. Google, I think people are reading it wrong. They're saying the AI search is going to kill their primary business of like their traditional search. Yes, I do think that it's going to change the way that we search, but people still know of like, hey, I need to look something up. What do they call that? They say, I'm going to Google it. So I'm pretty sure that Google is going to maintain their dominance. It's going to be different. They're going to figure something else out. But yeah, and of course, Google, they're in so many other amazing things. I love their future technology. I saw another headline this morning about them investing in fusion energy too. So yes, they're in quantum computing. They're in everything you can think of in the future. They're driverless cars. So I think it's a fantastic company. Of course, we know that. Company we did the trade of last week, Brian, was NVIDIA. and NVIDIA just rocking and rolling. They are at all-time highs. This was a nice winner. Also traded Oracle at the end of the week. Another fun one that went out to our subscribers. So make sure you subscribe for that. Here was last week's kind of a poor man's covered call, we called it, where we're getting into the name very cheaply. I'm getting into the name very cheaply, just kind of a not necessarily a recommendation. It's just kind of an example, which we can share out. But I just want to talk about, of course, earnings coming up. This looks a lot like the NVIDIA chart, of course. TSM, a company that makes a lot of the NVIDIA chips. This is just a massive grower, of course, of massive uptick here. Just unbelievable. We went from 140 to 234 in the matter of a couple of months here, and it just goes to show the AI trade is just rocking and rolling. People cannot get enough of these chips. Now, to buy these NVIDIA chips, we need TSM to make them. In order for TSM to make those chips, they need machines from ASML. Now, ASML, for some reason, is kind of lagging. Now, they got hit very hard on the Chinese exports controls, like a lot of these other companies did too. But that's hurting NVIDIA the same. That's hurting TSM the same. Why is ASML not participating in this rally? I'm thinking there's a decent chance that this upcoming earnings is going to fix this for ASML.
Yeah, I agree. I like the upside here. If you look at, let's just look at the technicals here. If you want to draw some lines, it looks kind of like a bottoming little head and shoulders bottom here, right? Came down, made a small, quick cup all the way to the very right side here, and it looks like it's a breakout. So you get a good earnings report, and then boom, like you really, let's see, 800 down to 600. That's 200 points there. So you're looking at 200 points back to the upside. I mean, 1,000 is not out of the question for a stock like this. If the earnings report, between some of the tariffs and the Chinese controls seem to be mitigated when they speak, there's really some upside potential here.
Yeah, and it is not only that news, they also have a nice dividend, 80 cents a share. That's actually pretty decent for a company like this, but they also have a very large buyback program. They were buying shares aggressively in 2023. They bought no shares in 2024. They're buying shares aggressively again here in 2025. So they have this big program. It's up to them, the discretionary. I think the company, the leadership knows that these are good levels to be buying this stock at. So I'm a big believer in the company too. Yes, it is big revenue to be losing potentially from China, taking that off of the table. But the growth in Europe and in America and elsewhere around the world is still growing fantastically. So it can be made up very easily, especially if there's a perceived like stronger competition coming in China. Maybe there's a need to ramp this up even faster. So that's my belief. I believe that this in here was a guidance downgrade for 2025. I believe they said then 2026 is going to be a year of growth. Maybe we're going to hear more about that on this call. So that's another reason for me to get into the name here. And here is how I am looking at it, Brian. I'm just looking at a simple call spread expiring next week, July 18th, 8:25 call, 1550. The July 18th, 850 call, 935. That's 615 to get into the spread. I'm thinking of maybe doing 2 units and then selling one ahead of the earnings. I think there's a good chance we rally into it and then just take a shot on the rest of it.
I think that's a great idea, actually. So like when you're talking about 2 units, right, you're gonna buy twice as much as you think for like to play it right now up into the earnings. If you get some profitability, take that profit and let the rest ride. If I'm looking about how much am I going to outlay here, I don't know, maybe like about a 0.5% of my portfolio value on $6. Maybe I would take a chance on this as like sort of a pretty good educated bet. Not something where I'm going to go all in and spend if I've got $6, well, 600, right? Because an option contract times 100 times the price, so $615. So you're kind of looking at maybe like a portfolio that is, a $10,000 portfolio, might equal one contract. So if I got $20,000, then I can do two contracts here. Or I could do, I could do the one contract on 10,000, but buy two, as Joe is talking about, with looking to maybe sell off one of those as time passes.
Yeah, and best case scenario, this would be like a 4-to-1 payout here, sort of $6 into 6.15 into 25. So that'll be 2.5% to 2%. That's a nice little return for a week and a half of work.
Oh, the risk reward on this I love. So this is something that's why I really like this sort of payout structure, and one that I think can pay out with high probability. Obviously, nothing's guaranteed. And if earnings report comes out and it's not so good and the stock goes down, the $6 is going to evaporate pretty quickly to zero. So it's a bit of a binary option trade, like that we like to call it, where binary meaning either it happens or it doesn't. It's like a sports bet, right? The team either wins or they lose. But I like the odds bet on this.
Yeah, and I'm just kind of surprised that the street's not picking up on these buybacks. We'll see if that is the case, how much they actually have bought back so far this quarter. And another way to think about it too, if it is bad news, yeah, you're risking less, but I think we should be watching this just kind of for like the whole AI trade in general. You can think of semiconductors, people think of it as a leading indicator because, people need to buy computers, buy, research and development stuff for the next quarter ahead of time if they are expanding. That's why it's a leading indicator. Well, this might be like a leading indicator for the leading indicators because this is like a supplier to the suppliers here. So if like TSM is expanding, if NVIDIA needs to build more chips, you're going to see people ordering these trades. So if the AI trade is still in the early innings here, Brian, if it's still like in, where the starter's still like got 100 miles per hour on his fastball here, we're going to be seeing these orders still ramping up.
Yeah. Well, you can get more trades like this. Go check out equityarmorinvestments.com. You can click on there, apply for the subscription, get information, especially later in the week. If we decide, we talked about putting two of these on, well, we might want to take half of it off, right? So we will probably send a message out to people to let them know when to take that other half off. And so, tune in, get the subscription there, but also lots of content. We have a free ebook about option trading. It gives some of the basics. It gives some of the experiences that Joe and I have had on the trading floor. So go check that out. That's totally free. It's an ebook. It's a great quick read. I think there's some actually really good stories in there.
You want to hear a story just come to mind?
Sure.
We're a little early today. Here's a fun story. So I stepped into the S&P 500 pit. You remember the largest open outcry pit in the world. It's a lot smaller now, maybe still 100 or so traders. But back then there was 500 plus traders in the pit. And back in the day, we actually had a dress code, if you can believe it, on the trading floor. We actually had to wear fancy pants and a collared shirt with a jacket. Well, it happened to be that the 4th of July was on a Wednesday this year, and there sometimes would be ahead of a holiday, the exchange would do a nice thing and let you wear jeans to work, which was just an amazing treat. All the traders just loved it. Well, on this day, the week before, the Friday before the 4th of July holiday week, there was an announcement on the loudspeaker, and all the traders are just listening up to this announcement. And they said, hey, I have an announcement. Because of the 4th of July holiday on a Wednesday, the entire week will be a casual Friday, meaning we could wear jeans all week. And that just erupted into the loudest cheer you'll ever hear from a bunch of traders. It was bigger than like we were watching soccer games. Everyone was just going crazy. So it culminated with 30 seconds of cheering. All the brokers were in the back ripping up their tickets, throwing confetti in the air. And then we had a 30-second USA, USA. So that's what the life of a trader was like in a nutshell.
Yeah, man, there's it goes to show just like the experience of people together working like in a spot. I mean, so many people have gone remote, but that was one of the fun camaraderie things on the floor about being other, because you can kind of feel each other, feel the vibe. So much fun, so spirited, nationalized for America. People just proud to be. And then obviously, hey, jeans. We get to wear jeans today. So.
Yeah.
So fun. Yeah, those were great days. Look forward to having those interactions with other people.
Yeah, and it was a great pit, a great really exciting place to be. I think with the S&P 500 pit and the VIX pit still having that hybrid feel where you still have that open outcry, that's still there to some extent, but it's still just kind of dwindling. It's not quite the same as it used to be.
Maybe we do a live webinar at the CBOE and get people to have a little tour, maybe organize something later this year. I'm kind of working on that actually myself. So, we'll have like be in tune for some sign up to come on down if you're in Chicago. We do a little training session, mock trading, get people to see the floor, see what it's all about, and learn a little bit about how to be a better trader. So stay tuned for that coming up. But obviously tune in every week here, every Monday, 10 a.m. Eastern. We go live a few minutes after that, call it 10:05. As the markets open, we digest some of the news of the open, some of the news from the weekend. We discuss that. We obviously give our trade of the week every week. So please tune in to this channel here, the Trading Zone, put on by the Trader Hub. I'm Brian Stutland here with my colleague Joe Teague of Equity Armor Investments. We'll catch you next Monday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.